with a debit of 150. Then we have insurance expense. That has a debit of 200. And finally, the last expense is called depreciation expense. With a balance of 250. So as you can see, make sure that all expenses are debited, revenue and capital and liabilities are credited, contra asset account is credited, and all assets are debited. Now, to make sure that we have the right figures, let's find the total of a debit and the total of a credit. So I will add them up. 7,750 plus 9,000 plus 2,200 plus 1,300 plus 15,000 plus 5,500 plus 1,000 plus 700 plus 150 plus 200. That will give me a total of 42,800. I hope that the total credit will be the same. 250 plus 4,500 plus 1,500 plus 1,150 plus 1,500 plus 21,750 and finally 13,400, and we get a different total. So I think we made a mistake somewhere. I will just check it. Okay, so just the total here is wrong, I think. So the total should be 43050, and if we find the total for credit, it will be the same, 43050. So this is an evidence that we posted the figures from the adjusting journal entries to the ledger correctly. So this balance is making a control over accounts, as you can see. So we had a balance between debits and credits. Also, I made a change. This one I wrote it before as a supplies, so it should be a supplies expense because the supplies is there. And this is exercise. And now we finished, I think, the second part of this example, or the third one, sorry. So we've finished now. We are done with this example. Example number 11. Example number 11 asked me to prepare the adjusting interest. We finished this one. Then we post this to the ledger, and the final step was to prepare the adjusted trial balance. Let's have now another example related to adjusting interest. This is example number 12. Now the last example for chapter 3 is example 12. It says that the Roach Motel is a hotel opened for business on May 1st, 2005. Its trial balance before adjustments on May 31 is as follows. Again, we have a trial balance, and after the trial balance you will be given an additional data. Based on it, you have to prepare adjusting interest, similar to previous question. If you can see, we have an item like supplies. We have to check how much supplies we used during the period to record the adjusting interest for supplies. We have a prepaid insurance. We have to check how much insurance of the insurance policy we used during the period. For the lodge. Lodge, this is the building of the hotel. We can call it as a lodge. It will has depreciation. Same thing for furniture. It will has a depreciation. So this is part of the adjusting entries. As you can see, we have unearned rent. Some of it might be earned during the period. So this is unearned revenue, but because it's a motel, they earn revenue through rent, so they have unearned rent. Yeah, so these are the items that probably we will just we need to look at during doing the adjustments for the year. So it's saying here in the other data, insurance expires at the rate of $200 per month. So simply I will debit. So for all adjusting entries, it will be at the end of the accounting period. In this example, it will be May 31. So we're starting with insurance. We will debit insurance expense and credit a prepaid insurance by 250, because simply the question said that we are insurance per month will be 250 is 200, sorry, so it will be 200 and 200. Already it was given to us like how much the insurance, so we don't need to calculate how much insurance per month. Second one, account of supplies, shows $900 of unused supplies on May 31. For this one, so how much we used? If we have 900 supplies on hand at the end of the month, so before we have supplies of 1,900, if the unused is 900, so the one that we use is 1,000. So it is simply 1,900 minus the 900, we will get 1,000. So I will debit supplies expense and credit supplies by 1,000. So this is just to show you how we get the 1,000, which is 1,900 minus the 900, the unused balance. So we have a debit for 1,000 and the credit for 1,000. We got this simply by deducting from the supplies 1,900. We deducted 900, the unused balance at the end of the period. Okay. Third one, annual depreciation is 3,600 on the lodge and 3,000 on furniture. So depreciation for a full year, annual means for the full year, 3,600. So we have to prepare 2 journal entries. So we will have depreciation expense and the credit for accumulated depreciation for lodge, and I will do another journal entry for depreciation expense and the credit for accumulated depreciation for furniture. So the first one, it said that it's 3,600 for the lodge and 3,000 for the second one. So I will say 3,600, and I will divide that by 12, and for the second one it will be 3,000, and I will divide that by 12. So because I want only the depreciation for 1 month, for the month of May. So for the first one, 3,600 divided by 12, it will be 300 debit for depreciation and a credit for accumulated depreciation by 300. For the second one, it will be 3,000 divided by 12, we will get 250 debit for depreciation and credit for accumulated depreciation by 250. So the adjusting entry for depreciation, debit depreciation expense and the credit accumulated depreciation, and same thing for the second one, but we have different amounts. So this is the adjusting entry for depreciation. So the third piece of data, we made one journal entry for the lodge and one journal entry for furniture. The second one, mortgage interest, is 12%. So this is, we call it annual. This is we call it annual interest rate. So now the mortgage is 35,000. So simply we'll say 35,000 times multiply it by the interest rate, which is 12%, and time the fraction of the year. So because we simply want an interest for 1 year, so we'll say 1 divided by 12. So for this we will prepare interest expense, and we will credit interest payable, because interest will not be paid now, it will be paid at the end of the note payable life, and interest payable as a credit. Let's calculate this. So I'll say that we have 35,000 times 0.12, and this is multiplied by 1 divided by 12. So we'll get an interest of 350, and for the second one it will be a credit for 350. So this is the adjusting entry for the interest. Now let's check the next one. It's now let's solve the last transaction. We have salaries of $300 are accrued and unpaid at May 31. So this is accrued salaries, which means these salaries expense are not recorded or paid yet. So the adjusting entry for this one will be a debit for salaries expense and for 1,500, and we have a credit of salaries payable for 1,500, and this is the end of this exercise. So next lesson will be chapter 4, and thank you very much.